How important is this election going to be for the overall economy and markets?
It's going to be it's going to be crucial. Several of the things you mentioned are factors that are going to be influenced and impacted directly and very heavily by the election. Stimulus is probably top among them. Right now, Pelosi is saying that she still is optimistic a deal can be reached before the election. The simple fact of it is, even if you struck a deal right now, you wouldn't really have time to get it done. The Senate's just left until November the 9th. That means that stimulus is a post-election event in basically any scenario. The election is certainly going to weigh on the political realities that dictate the contours of that deal. And certainly a Biden victory will have many effects on Democrats and Republicans who may choose to wait until 2021 and who may feel demotivated to cut a deal during lame duck, potentially delaying action even further.
All right, so Caleb, you've actually got some numbers because you and your organization have actually gone out and polled investors and traders to ask a slew of questions about what exactly could be the big focal points. What can you tell us? Is the election a big deal for investors, according to your survey?
Absolutely, and thanks for having me, Dom. We've been surveying our readers at Investopedia since the pandemic began to see how they're moving their money, what they're worried about, what portfolio changes they're making. In the last two surveys, this starting in late August all the way through October, it's been the election, front and center among their concerns. They're concerned about the spread of virus. They're concerned about another shutdown in the economy, but they're really right now concerned about what happens next Tuesday or what happens in the days following that. And because of that, they've been kind of holding their cards for the last 2 or 3 months, anticipating a market downturn. They saw it coming in August. Sure enough, we had that little correction, and they see it again. They see the market falling over the next few months, but the elections are number one concern. And then they're concerned about what happens after that in terms of civil unrest, in terms of what happens if there's a contested vote. So there's two main concerns overhanging their heads as they look at the next few weeks, and they have not been doing a lot of portfolio moves since then.
It seems to me interesting because there are so many experts, Clayton, and maybe those in Washington, D.C., who say that these elections are short-term events. They're short-term catalysts that might provide some trading volatility, but that don't actually have any long-term lingering effects on the market, regardless of who wins. Is it safe to say that investors this time are maybe a little bit more heightened, Clayton, about the election outcome than they have been in years past?
Well, certainly, and I do defer, obviously, to obviously my colleague here who has spoken maybe a little bit in more depth to a larger number of investors. But the people that we're speaking to are saying that this will have a long-term effect or a lasting effect on their expectations for economic growth, their expectations for the impact of government policy, and that's certainly driving decisions that people are making today. That's everything from decisions related to factors as broad as the future of U.S. fiscal policy and potential for massive changes there to sector-specific decisions on energy, on trade, on tech. All of those things are, I think, in investors' minds, all of those things are going to be impacted for multiple years by the outcome of this election. It's not simply a short-term event and then we return to stasis. It's really something that's going to change people's outlook for a significant amount of time.
Caleb, the amount of interest right now in what's happening with the economy, the markets, everything happening in Washington, D.C., has obviously driven a lot of people to become more conscientious about what's happening with their portfolios. Have you noticed anything with regard to the people trafficking to your site, to your content? What exactly are they interested in mostly? What are people trying to catch up on? What are they trying to learn more about?
Sure. It's fascinating because we have so many people coming to us via search. So they're putting something into Google and coming to us. Over the last few weeks, it's really been about the election and about the policies of the two candidates. We have a great piece on Biden's tax plan and Biden's economic plan. Same with Trump. People are pouring into those to see the actual differences. Of course, they're looking up tax rates and what happens if we get a tax increase for wealthy Americans. A lot of our folks have been invested a long time. They're concerned about those capital gains. They're concerned about their investments. So they've been looking at the policy stuff, but they've been also looking inside the markets because over the last few days, if you hadn't noticed, we've had a lot of volatility. So they're looking at things like short selling, at covering. They're looking at a lot of options-related content because they're not sure how this is going to play out. And they're very concerned about volatility because that has been the theme over the last couple of weeks. So they're looking up implied volatility. They're looking up different ways where how to protect themselves if the market does correct again. We have a lot of older investors who've been in this game a long time, and a lot of them have been pulling money back off the table, sticking in cash or sticking in dividend blue chip stocks where they feel safe. The younger investors have been risky this whole time, going after airlines, going after oil stocks, looking at inverse volatility ETFs, wherever they can find an edge to trade the market. A lot of them are doing that on the younger cohort. The older cohort has seen the recession 10 years ago. They saw how long it took to come back, and they've been pulling back into cash and into the blue chips where they feel comfortable.
All right. And Clayton, the last word to you here, just a couple seconds to go. Do taxes matter for investors?
Taxes always matter to investors, and I think you put it best. People are looking for the difference between Biden's plan and Trump's plan. Capital gains is certainly top of the heap. I would say that based on the people we talked to, second to that is what's going to happen to the corporate rate. How's that going to change? And most importantly, when is it going to change? People have real questions about timing and cadence of some of the first policy priorities in a Biden administration.
Shepard Smith here. Thanks for watching CNBC on YouTube.